US inflation outpaces expectations, supporting bets for a 25 basis point cut by the Fed in November. Japan's producer prices are stronger than expected, and a manufacturing bounce in Singapore may lead its monetary authority to hold policy next week. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ FX analyst Kausani Basak analyses how the Thai Baht was the second strongest Asian currency in Q3, prompting the Bank of Thailand to intervene.
This was a 14% quarter-on-quarter rise. Such a strong currency led to growing concerns from the export and tourism sector regarding the currency's impact on competitiveness.
But first in 5 and 5 with ANZ. I'm Alex Tarrant, standing in for Bernard Hickey, who's on family leave. US stocks were down slightly at 4 a.m. Sydney-Melbourne time after US September inflation data came in stronger than expected. The headline CPI rose 0.2% in the month and core inflation by 0.3%, both 0.1 percentage points higher than the consensus forecast. ANZ head of G3 Economics Brian Martin says US disinflation looks to have stalled over the summer.
I think if you take the bigger picture, yes, the move towards target inflation is in place. The Fed has made a lot of progress. And when you look at headline inflation at 2.4% year on year, you've got to say it's within touching distance of target. But core inflation sometimes gives you better indication of the underlying inflation temperature of the economy. And my assessment is that the September CPI numbers, particularly when placed alongside the strong September labour market report, suggest that the Fed need to move gradually in easing policy towards a more neutral stance. So I think the data play into a 25 basis point rate cut.
The US dollar index was flat at 4 a.m. Sydney-Melbourne time, as some weakness in initial claims jobs data tempered the upside CPI. The Aussie dollar was up 0.22% at 67.32 US cents, while the Kiwi was up 0.34% at 60.83 US cents. Number 2. In Japan, goods producer prices were flat in September against expectations for a fall. Now, the Bank of Japan focuses more on services PPI. And looking ahead to that, ANZ FX analyst Felix Ryan says a spread has opened up between a stronger services PPI and the services component of Japan's CPI, which has been easing.
That maybe does add a little more evidence or support for the Bank of Japan taking that more cautious route towards further policy normalization. So, we do now see December this year as the next meeting where we'll see further normalization from the Bank of Japan. It certainly does seem like from the commentary and the most recent summary of opinions from the bank that they are happy just to take a slower but cautious route in terms of normalising policy.
Number 3. Korea has a rate review today. ANZ economist Crystal Tan and the market are expecting a 25 basis point cut to 3.25%, the first since 2020, as the Bank of Korea joins the global easing party.
In Korea, monetary policy settings are restrictive. It's restraining domestic demand. We look at inflation, that's under control now. September data show that the headline print fell below the central bank's 2% target for the first time since 2021. Now, housing market stability remains a key concern, but macro-prudential measures were tightened from September. We do have high-frequency data pointing to a cooling housing market, so that should offer the Bank of Korea some comfort.
Number 4. Singapore also has a monetary policy review on Monday. ANZ head of Asia Research, Koon Goh, says the Monetary Authority of Singapore isn't looking to join that easing party just yet, even though core inflation is falling.
Growth, however, is accelerating, and we're expecting the Q3 GDP numbers to come in very strong, with year-on-year growth accelerating to 4%, which is well above potential. Therefore, this strong growth will likely start to exert some inflation pressure into next year, which is why I expect the MAS to be on hold at the last meeting of the year, and the earliest possibility I see them easing will be in early 2025.
Number 5. Koon says that bounce in activity is due to a strong recovery in Singapore's manufacturing sector during the second half of the year.
Singapore's manufacturing activity was quite weak in the first half of the year, but it looks like they are finally starting to benefit from the global semiconductor upswing, and I guess it's a bit of a catch-up play. So this strong manufacturing rebound is consistent with the economy-wide PMI readings that have been coming out, and very much consistent with a very buoyant business sentiment that is currently out there.
Coon go there. Now in our bonus deep dive interview, Thailand's central bank has been intervening in the currency markets to temper recent currency strength. ANZ FX analyst Kausani Basak spoke to Bernard Hickey about how the baht was the second strongest Asian currency across Q3.
By the end of September, the Thai Baht had reached a multi-year high of 32.17 against the USD, close to the levels last seen before the start of the Fed rate hike cycle in 2022. This was a 14% quarter-on-quarter rise. Such a strong currency led to growing concerns from the export and tourism sector regarding the currency's impact on competitiveness. This prompted the Bank of Thailand to intervene in the market last week. So Thailand's FX reserves have increased by USD 16.5 billion in Q3 based on the latest data. So after adjusting for valuations and other changes, we estimate that the size of the intervention during the quarter was over $5 billion, which is an amount in line with the previous intervention episodes.
And so why did the baht rise so much?
Actually, the strong rebound in the baht was driven by several factors. First of them was weaker USD as markets started to price in Fed rate cuts, with the FOMC delivering a 50 bips cut at the September meeting, and then unwinding of domestic political concerns following the removal of former Prime Minister and appointment of the new Prime Minister in mid-August. Then also strong foreign equity inflows into Thailand in September following news of the expansion of the Vayupak fund to boost stock markets. The fund received a subscription worth 190 billion Thai baht, exceeding the total offering of 150 billion Thai baht. Also at the same time, gold prices reached a record high. Due to Thailand's position as a major gold trader in Southeast Asia, the baht tends to appreciate when gold price rises. So all these factors contributed towards such a strong baht.
And so why then does Thailand's economy need a weaker baht?
Thailand's economy is reliant on tourism and exports for growth. However, in the recent quarters, both the sectors have been lagging. Thailand's export growth has been slower than regional peers because its manufacturing sector has not capitalized on the ongoing upswing in the global semiconductor cycle. This is because the Thai manufacturing industry has limited exposure to high-tech sectors, whereas in its auto sector is facing stiff competition from electric vehicle manufacturers. The manufacturing slowdown started towards the end of 2022 and has persisted this year. Due to the slowdown of manufacturing activity, the capacity utilization has also declined to below 60%. Also, Thailand's tourism sector has not caught up to its pre-pandemic levels and tourism revenue is also lower. This is mostly because the Chinese tourists who were high per capita spenders are missing. Overall, tourism flows are set to increase during the seasonally strong year-end period.
So what do we expect to happen with the baht, and what should we look out for in the coming months from the Thai government and the Bank of Thailand?
So a rebound in the USD in the past week has led to an unwinding of some of the recent baht strength. So we will likely see some weakness in the currency in the near term as markets now look to have completely priced in the Fed rate cuts and focus starts to shift towards the Thailand's macroeconomic fundamentals. And oil prices have also risen in recent days due to escalation of tensions in Middle East. So there is also potential headwind that the delayed current account progress can affect the Thai baht. So in the near term, we expect the baht will weaken and the USD THB can reach the 34 level where it can face some resistance.
Kausani Basak there. I'm Alex Tarrant, standing in for Bernard Hickey, who is away on family leave. That was 5 and 5 with ANZ for Friday, October the 11th. Catch you next week with some key China price data and an overview of its Finance Ministry's stimulus briefing this weekend.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.